G'day everyone, welcome to this weekend general update for the 7th of July. It was certainly a very positive finish in the US on Friday night, so we're poised for a pretty good start on Monday morning, I suspect. And judging by the pattern, I think the correction is over in the US now, and we're probably going to see prices trade up from here. So pretty good week all round. So a quick summary, the S&P index rose another 18 points on the week, second good week in a row. So for me, that clinches it in terms of probabilities. I think we've seen the lows, the correction's over, and we're going to see some positive trading for a while. Backing that up, of course, is the fact that the Russell 2000 index performed even more strongly than the S&P last week as well. So when you see the small and mid-cap stocks leading the market, then you know that there's not anything terribly untoward around the corner. Now, what really helped on Friday night was the jobs report, and I guess it was a bit of a Goldilocks report because the way markets are these days, if the jobs report had been too good, then people would have started worrying about the Fed withdrawing the stimulus more rapidly. But if the jobs report had been really bad, then people would have worried about the economy. But it was really just in the middle. It was good enough for people to feel okay about the economy, but it wasn't so good that people started worrying about stimulus. So they can see that basically both things are happening. The economy's improving slowly, but the Fed is unlikely to withdraw their stimulus. So that's absolutely perfect for the stock market. Just before we go on to the ASX 200, let's just have a look at the S&P, and this is the chart we've been looking at now for many months. We had a rising trend channel going from November last year, very clearly defined. Eventually, prices have to make a slightly bigger retracement. So you end up getting a retracement of the bigger run that started in November rather than just each individual little run. That occurred. 1556 was a target. That's the 38.2% retracement. We got within 3 points of that, which is good enough for me. And we then have come back up again. And the fact that we've now closed above this 1620 mark. So I was looking to get up above these lows here of June, early and mid-June. We're now back above those. You can see it was a very positive finish on Friday night. So I wouldn't be at all surprised to see this market push back up now and head above 1700. So pretty positive signs in the S&P and the market in general. Now the ASX 200 ended up rising 40 points on the week, so it wasn't a bad performance here. But we're getting this incredible yo-yo effect that I'm sure you've seen talked about on TV, where it was one day down and then one day up and then one day down and one day up, and it was just basically day about. So that is occurring largely because overseas hedge funds are selling into any strength at all. Our dollar is down, and so overseas hedge funds are selling out on the currency effect. They sell down one day and then the market bounces up as the locals take over the next day. Price goes back up a bit, and then the overseas funds step in the next day and bash it down again. And it's hard to know how that's going to continue in the short term because it's very currency related. Now we've been getting some outstanding results on selected small cap stocks. It really has been a terrific period this year, and that looks really set to continue. So let's have a look at the ASX 200. Sorry, just get the right there we go, finally got there. So let's have a look at the ASX 200. And you can see compared to the American market, our market's really been struggling in a major way. So you can see over the last couple of weeks, just these severe downdrafts, and then goes up for a couple of days, and then we were down and up and down. It's just all over the place, drives you mad. So that's been the fate of our market in the near term. Now gold fell $12 on the week. There are certainly some better signs for gold, and it's been such a horrific market for gold stocks for in excess of 18 months now that the turnaround was unlikely to be nice and sharp and clean, because there's still a lot of people out there, I'm sure, who are going to be looking to sell into any strength in gold stocks. The people that are bailing out at probably what will prove to be close to the bottom. But there's certainly some better signs there for gold stocks, and there's a few in our market have done pretty well. Now copper slipped to $3.06, but that was really largely the fact that the US dollar has been rising very strongly over the last couple of weeks. Oil jumped up to over $100 a barrel, and that's largely a result of what's going on in Egypt at the moment. There's the spot copper chart, and just before I move on, we'll take a look at the gold charts. So first of all, let's have a look at silver. Let's have a look at silver for a while. You can see silver still in a steep downcline, and it's now down below $20 and really still looking very, very sick. But there's going to be certainly some strong support around the $15 to $17 area. But silver has been just a terrible ride for quite some period of time. But I still remain convinced that we will see gold and silver turn up significantly into the future. So still worth keeping those on your radar. Now this was gold on a daily basis last week. Went up strongly for a couple of days, headed down on Friday night, but again a good part of that was currency effect, as the US dollar had a pretty strong night, and that's looking at it on a weekly chart. Now it's possible we still could get a bit more downside yet. We went through this 50% retracement level at 1302. The next level down is around 1156. Now it doesn't necessarily have to go all the way there. It got to a low of 1191, so that could be the bottom, but it could also be that there's another little bit to go to the downside. This is the GDX chart. You can see we had a very strong reversal last Friday night. I think we looked at this last week. After that it really just tailed off a little bit, but initial bit of selling on Friday night. You can see a bit of a gap down here on Friday night because the price of gold had gone down, but it did finish basically on its highs for the session, so not looking too bad. And let's have a look at the this division chart between the GDX and gold that we've been looking at for a long time now. Started to show some better signs in early June, but took another leg down, so we're still not out of the woods yet, but there's more volatility down here now. You can see up through here the GDX was clearly underperforming. There was virtually no period at all where there was any real outperformance, but you can see since June we're starting to get some sharp volatility at the bottom here. So there's definitely some signs that gold stocks are starting to do better than gold itself. Now just moving on to I guess to the overall strategic approach. This is out of order. I'll bring the whole slide up. So it was an outstanding week for the high quality small caps that I've been banging on about all year, and you find that once markets have turned around and sentiment starts to improve, as it certainly did in the last few days of June, the cream always rises to the top first, and the stocks that I've been focused on for more than a year now have rebounded very strongly, and we've been fortunate to be able to take advantage of that. The only other advice I'd offer is to avoid large stocks that are going to be owned by overseas hedge funds, because I don't think anyone knows what's going to happen with currencies these days. The US dollar's going up, the euro's going down, the Australian dollar's certainly going down, but governments and central banks are so interventionist these days that who knows at what point a government is going to step in and radically change their position to try and weaken their currency. So therefore, there's a huge amount of uncertainty about what currencies are going to do. And I can tell you that if the Australian dollar keeps falling, then the selling by overseas hedge funds will continue in Australian stocks, in the banks, in BHP, Rio, those sort of stocks. So for me, I'm not saying that the Australian stocks, the large Australian stocks, will go down. I'm just saying that there is a huge amount of uncertainty because, currencies are just so unpredictable. So I think it's just best to stay out of that area altogether and stay in the stocks that overseas hedge funds are not basically buying and selling, and that's the small to mid caps. So that's it for this week. We've had our correction, I believe. I've been saying for a long time 2013 and probably 2014 would be outstanding years for stocks. We've had a lengthy run this year. We've had a correction, and now we're well poised for the next few months. So that's it for this week. Cheers.